All right, so I just wanted to show you this these quarters. This is quarters theory levels. Okay, uh, but I wanted to show you what it looks like. So this is 1.0 to 2.0, which is 100,000 level. So really, what I usually put is 100,000 quarters theory levels. So you could do whatever you want. You could write out quarters theory levels. Copy that. Then I've got um, this next levels, which are basically like if we just go to where we are now, 1.1 to 1.2. That's going to be our 10,000 level quarters theory levels, and so the next one I don't have organized yet, which is these ones. You don't have to really have those ones, but the thing about it is, if you're on a smaller time frame, they can be helpful. Um, obviously, because you're getting your entries. Uh, you have to have something to work with around these. Uh, you know, and obviously you've got structure, but you need to be aware of these levels as well. Um, and I don't have these done yet, but I guess I could just do it real quick. But you basically just go in, real simple. Um, and just fill it in. And you make sure you use the right colors. And I know it looks confusing, but this is actually not really a quarters level. This is I guess kind of like a ghost level. A ghost level. It's like it's in between. It's like I don't really use them. It's just that sometimes you know you could get some use out of it. In other words, if you see this, if you see this, um, what do you call consolidation? Where's it consolidating around this level? Where's that level? It's basically a half quarter. Um, oh, you know what? Let's see. Because we're 26 to 27, this is 26,875. Actually, this is supposed to be white. My bad. Um, I always heard when you don't know what you're talking about. No, I'm kidding. But no, I was told one time at one of my jobs is that if you don't know what to do, look busy or act busy or whatever. At least look like you're doing something. So I guess at least sound like you know what you're talking about, right? Um, so um, so these levels, when you get down to these small levels, you might choose not to do the white ones, but definitely on the larger levels, the like these levels right here, you definitely want to have them. So if they're significant on a large time frame, then they're gonna be significant on a small time frame too. So a little shortcut you can do. I've showed this many times before. Is cop. Oops, sorry. Copy paste this. Um, and then just do minus 0.0025, and that's going to give you your next one. Just clone, paste into there, minus 0.0025. You know, in the math is different every time you do it, but the concept is the same. You're taking a quarter, which is from here to here, or say like from here to here. That's like, you know, 0.0025. That's the difference. See that? From 0.26750 to 0.27000. The difference is 0.00250. So the difference between this and this is the same. This and this is the same. And this and this. Actually don't exactly know what the heck that is. I must have drawn that sometime a long time ago or something. Anyway, all right, minus 0.0025 equals copy, clone, paste, and it's already, you know, locked in because it's a clone. But yeah, see, boom, it popped up that perfectly. See, not only was it a bigger time frame, a 10,000 level, but it popped off a small quarters level as well. Yeah, so anyway, hopefully that makes sense. You can see the different scales, 0.26 to 0.270, and this is where we are now. And so to prepare for this range, it's super messy, but literally all you have to do, you could do it different two ways. So since we have the calculator pulled up, we'll just go ahead with this way. But you know, you can just position it in. Once you get familiar with it, it's real super simple, real easy. Like, I've just been doing it for a long time. Been doing it for a couple of years, or yeah, at least a year. No less than a year. I've been drawing these like definitely every week, almost every day. It seems like sometimes. But you know, you can have everything organized, right? So again, here we are. And just looking at this real quick, trying to see if there is a trade anywhere. Midnight, we have to turn this on. So this is your midnight open. And then if you're expecting it to go up, then you know typically you're expecting some type of move down first. So you know, we have to let that develop, but I don't know how much I'd be expecting to happen. But this video is because it's New Year's or between Christmas and New Year's. But yeah. So anyway, quarters theory. So here we have from 0.27 to 0.28, and this is a halfway point, and then this is a quarter. And this is a quarter, and then we have the half quarter levels, whatever you want to call them. But they're basically a half quarter. You know, it's just like in monetary value, you would have a dollar up to here, 50 cents, 25 cents, and you know, and then this would be like 12.5 essentially. Which is half of 25 is 12.5. So hopefully that makes sense. And you know, if we zoom out, it might look a little messy because we have two of these. So now it starts to look a little bit like, you know, what's going on? But just remember that from here to here, 0.26 to 0.27, that is what we have here. The sorry, let me properly label this actually. Okay, so you can see it. That's the 1,000 quarters theory. Okay, so that's that. That's those. Okay, 1,000. Okay, and then if we just take that off, and make sure you stay organized. Like, that is the most critical thing like you could possibly do on the charts. You have to stay organized, or especially if you're drawing quarters theory, you have to be like crazy organized. Like, not crazy organized, but you have to be organized. So anyway, point 2 to point 3, that is your 10,000 level. So the reason I call it that is just, I'm just looking at the number of numbers, right? How many numbers are there, right? Okay, that helps me to frame everything and stay organized. So, and I've got all these, but they're all the same, and the reason that they look different, like for example, if you go from here, you just have, every now and then you have one of these 100,000 levels, like right here. See, and then you have one here, right? And then you have up here, and that is something that you're just gonna have to get used to. Just the kind of imperfection of it, but it is perfect. And so there's perfection and imperfection. It is perfect. This way that I have them drawn is absolutely perfect. It's the absolute perfect way, and I'm not tooting my own horn, or maybe not my horn, but basically this is all God. It's all God in the sense that there's organization in the numbers, and in the math, and in the what's happening and what's going on, and it does glorify God. It does glorify God. But you can see, once again, here's the 100,000 levels. Okay, and all we do is we would zoom in. You'd have this, okay, and you zoom in on price, right? And then you activate these, okay. Now you see we have this 10,000 level. See, okay. So now what you do is you zoom in on this, okay. You activate. You may bump it down time frame, and then activate these, right? Okay, now you've got some framing on your levels. And if you just go back and look, if you have these levels on your chart and you go back and you look at where price consistently reacts off of these levels. And so super helpful. It's a huge advantage to have these levels, and I've never seen anybody draw them like I do. The reason that I do draw them, and here's something to note, is because price reacts off of them. That's the reason I draw them. So here's something to note. So you see like how these two overlaps here. I don't allow that anymore. I used to have double. Now I don't, because it's too confusing, especially when you're hiding and unhiding these, because like I just showed you, basically if you have this still on here, and you go and you you start hiding and unhiding and stuff, and you're like, okay, there's an extra level. It just you don't need it. It just will just add to the confusion if you have it. So just make sure that you just know, simple, that this here is basically, um, you know, it would be like your orange typically, like because I have like red on the whole numbers, and then orange in the middle, and then yellow halfway between that, and then white halfway between that. And it just helps me stay organized. And so if you just understand, this is the same, you know, what would typically be an orange level, like I show in some of my other videos, um, you know, that that you'll be fine. Like see right here, and actually, why is that off one point? I don't know, but there. So you see how this is how, you know, like so red, orange, yellow, white, right? And then down here, obviously, this is slightly different, but that's just the way it goes. So, and then down here, you know, this would be the red one typically, but because it's a higher level, then you just understand that that would typically be where your red would be, right? But then you have, you know, orange, yellow, and I just didn't draw my whites in here. Actually, I drew one. That's supposed to be white, not gray. You know, this is I was you know, sometimes what I'll do is I'll like, so in the past I would, you know, be on this chart, but then I would improve my quarters theory drawing on the chart in terms of like having these larger quarters. You know, I used to draw it different, but I think that I basically perfected on TradingView how it should be drawn, in my opinion. Quarters theory levels. I don't know what that level is. That shouldn't be on there. That's just, I don't know what these are actually, so I'm not sure. But let's see, 26, 25. Yeah, it looks confusing. When was the last time price was? Was that recently? Okay, that was recently. Yeah, I mean, all you have to, if you want to just like, because you know, I will be analyzing this. But you know, you don't necessarily need them, right? Like you could probably get by without them, but there is some utility to having them. As you can see, look at how price perfectly reacted off of that, and like I said, put that back, zoom back in. But yeah, if you go back, let's see, where are we? This way. And you draw those white levels in. You know, there's some utility to having it. Price will react around it, as you can see. It's just a nice level to have on there. Once again, you know, copy paste plus, just a little easier sometimes to do this. I just think it's oh, and then if they say you have this one, you want to go down to here, so you just do 500, and now you've got the one below here. And then the next one's 250. And I'm just doing this so you can see how actually price will react around these levels, like you see right here, and obviously right here. Okay, so that goes to our 500 level, which will be our red level. But because it's higher time frame, that is what it is. So I'll stop there. Even though we were down below there for a very, very, very short time. Oh, wait, hold on. Where was that? There was somewhere where it was... Anyway, let me get back to what I just did. Right here. Zoom in on that. I know it's like, it looks messy now because yeah, I know. Just bear with me. But just trust that this is the 1,000 level, quarters theory level range, and that's what they are. They're ranges, like, you know, basically like 1,000 price range, 10,000 price range, 100,000 price range, and that's the, in terms of significance. That's what that is, you know. So, but you can see price, boom, reacts off of there, boom, reacts off of that, boom, reacts off of that, boom, reacts off of that. Like, it's like a crazy, right? Boom, you know. It's so having these levels is just critical, and, you know, don't freak out when you're like seeing all these levels and you're like, oh my god, what is this? Like, what even is this? Just relax. When you're zoomed this far out, you really ought to have these hidden, like, because otherwise, obviously, it's going to be too much. And so when you're on a higher time frame analysis, like, you know, the daily, even, you could probably just, you might get more out of it if you use your 10,000 levels, right? But when you start getting on like the 4 hour and stuff, go to that and get this off for right now. Okay, thank you. Yeah, then you start having more utility with the 10,000 levels, right? And then when you go to here, obviously the get that off of there. You start having more utility with some of these things are so like, oh, why is that? I'm pretty sure I already hid that one time. I don't like that, whatever that is, that orange London. Oh, you know what that is? That is 2 o'clock, I think. Wait, what is that? You see that? I hate that. Anyway, sorry. Let me just... I don't want to hide that because I want to keep it on there. But anyway, yeah, so you start going down to like your... So right here on the hourly, you know, you would just be having probably these levels mostly. But when you start getting down to the 15-minute, that's when you can go ahead and call on these guys. And you can start seeing... let's go back to the hourly and see how that looks on the hourly. So yeah, I mean, it's pretty busy, but you know, so it just depends, you know, how you want to do it. You could leave them off or have them on. But like with these 10,000 levels and stuff, and even the 100,000 levels, like a lot of times it'll go somewhere above it, and that's for whatever reason. You know, it's trying to push up. It's trying to do something. It's trying to do whatever. But it wasn't able to make it above 28 here, 1.28. So then it broke down. Almost got to 0.26. Went up. Broke above 0.27. Came back. And definitely I would say we're headed up from here. As far as today, yeah, I would buy that honestly where. That's not the topic of this video, but that's the Asian range forming. But like, I'm just trying to illustrate the utility of these levels. We can expect a reaction off of this level just because of the fact that it's a significant level. I mean, look at the scale. You have the whole New York range right here, and that's inside half of this 1,000 range right here. See, and basically when you see the daily range. So when we check the average daily range, if we have ATR, the average true range on the daily chart, we can find a very, very accurate average daily range. So I'm going to say, I'm going to go with like 900 being a safe bet. So we're going to, so 900 would be something that we could expect for a move. And then that's when you go to finding your open, which this is never really accurate. The open's actually down here, but I usually just put it like right there. Only problem with that, you just try to draw it and it messes up. Actually, I usually put it over here, matter of fact, but away from price action. But so then you might. Yeah. So what I was saying was, but by the way, for the average true range, you'd use that to find your. So like you'd take a partial here, and then you would use the average true range to figure out what you can reasonably expect for the day in terms of profits. But yeah, so the average daily range is like somewhere in between the 1,000 range, and so I'm just trying to explain the significance. You say, well, these are such small levels and whatever, but they are very significant. But this is it. I wouldn't go any further. You don't need to go any further. You don't need to do, even if you're trading on the 1 minute and stuff. It's all you need. It's all you need. And it gives you it just gives you reference, of you just have to I just feel like you have to have these levels on your chart. Like for me, if I didn't have these levels, now it's not to say you have to have them all the time. You don't. You could literally look at price action without the levels, right? And you may be able to find some discoveries of things that are sort of more related to what price has done. You see what I'm saying? Versus like the reactions off the levels, and that's and you can kind of get that analysis, and you can say, okay, it looks like price is doing this or that or the other thing. It looks like price is reaching for this high to go above. Okay, well, how does that look and framed off? Oh, okay, well, here's a framed off of quarters theory. Then you can say, okay, it goes up off of this. Boom, look at that. That's pretty awesome. Then you say, okay, well, what does it look like? What are we looking like in terms of the 10,000? We got the 100,000. Now we're looking like in terms of 10,000. Okay, well, cool. Well, now you know, I'm seeing it. Okay. So then, okay, I can see, you know, what price is doing and whatever your analysis is and all that. Let me see what's going on here. Okay. Well, we had price come down, did this, okay, you expect to go up here. Okay. It just gives you like something to frame things on, you know? And so with that, you know, and like to the monthly, I'm almost closed the video now, but you know, and you just look at how significant these levels are, right? Bounced off of this 1.0, goes all the way up to 2.0, bounces down to the halfway point, double taps that, goes back up to 2.0, comes down. It's trying to get below here, can't quite do it yet. Finally, okay. So it's like support goes up, resistance, support, resistance, support. Okay, finally support becomes resistance. But you know, we did break a low here. So I wouldn't get too caught up in what I just said about the support resistance, because that's not really an ICT concept. It's not an ICT concept at all. But and I don't claim to be an ICT teacher or whatever. I'm here to make money. I'm here to learn the best way. And if I can use ICT concepts to do it, great. If I can use whatever else, anything else, okay. But I'm going to use what works. And that's it. So I'm not like, you know, following a cult or something like that. I'm just, you know, looking at what the market is doing. I follow the market. That is what I do. And I want my goal is to understand the markets and how they behave, what they do, and that's my goal. So my goal is not to just be obsessed with ICT or anyone else, you know, or any other thing. It's I'm obsessed with the market. Okay. And so that's my goal, is to understand the market. So let me be clear about that. All right. Well, cool. Well, anyways, let me hide that because it just sort of. There you go. Yeah. So. But yeah, and one thing before I end this video, I just want to do something real quick. Nothing. It's just, yeah. So I mean, you know, it's hard to get everything perfect. You know, it takes a lot of time, a lot of patience. A lot of peace. You gotta have peace to do it. But just remember that stay organized. So I think that'll be a nice so I'll go screenshot of that. Maybe I'll put that as my thumbnail. All right, well, until next time, Merry Christmas. I know it's Christmas was yesterday, but maybe I'll transition into, I'll put a background of like the New York ball drop or something, and I'll start doing a New Year's theme. But my theme for this year is for 2024 is to really be in sync, in tune with the markets, and that's my goal, is to trade well, to trade you know, the right way, to trade in a way that where I'm constantly taking profits. Like, that is my goal, right, is to take profits, take partials, and take close fulls. Not be greedy, not be grandiose, not be overzealous, not be wanting too much, not be wanting to get too much out of the market, you know, but just taking what it gives me, you know, taking like 50% off when it gets to a reasonable level. And that's not the topic of this video, but was just talking about Christmas and New Year's and stuff, and my goal for next year is just to trade well, to be a great trader, to take profits, to keep my risk low, and, you know, reduce risk at every chance that I get. So anyway, all right, well, thanks so much for watching, and Merry Christmas and Happy Holidays and Happy New Year. All right, thanks.